and welcome again to IVCA's All-Cap Regulatory Watch. Hi, I'm Sonia from IVCA's advocacy team. The first quarter of 2026 has been particularly significant with important policy movement, continued regulatory engagements and tangible steps towards unlocking long-term domestic capital. In this edition, we take you through what changed, why it matters and what's still evolving. This quarter saw a few important developments for the alternate capital ecosystem. First, the revised Startup India definition expands the revenue threshold to 200 crore with a separate carve-out for deep tech startups. This provides greater policy continuity for scaling businesses and recognizes the long gestation cycle for deep tech. Second, SEBI has rationalized the AIF reporting framework, simplifying quarterly filing while moving detailed disclosure to an annual report. This reduces compliance burden while maintaining oversight. Third, changes to the Press Note 3 framework introduce a calibrated approach to investments from land bordering countries, including a 10% beneficial ownership threshold and faster approval for selected sectors. While this step is in a right direction, the key industry asks such as Green Channel and One Fund One approval is still under consideration. IVCA continues to engage closely with the department on these aspects. Fourth, on winding up, IVCA welcomes SEBI latest measure impacting AIFs and appreciates the regulator continued focus on improving ease of doing business. The inoperative fund framework and enhanced winding up flexibility acknowledge the practical realities of fund operations, particularly towards the end of fund life. The continued move towards simplifying reporting and requirement and optimizing formats is also encouraging as it supports greater efficiency in day-to-day compliance. These measures reflect a constructive and consultative regulatory approach. This quarter saw extensive engagement across regulators and government body. A key area of engagement across multiple forums this quarter has been the implication of Supreme Court Tiger Global judgment on foreign investors and foreign investments. IVCA engaged with Department of Revenue, DPIIT, Chief Economic Advisor and the Attorney General of India to ensure clarity on tax treatment of legacy investments, confirm that the investments made before 1st April 2017 will continue to get tax exemption as promised under treaties, TRC as a sufficient proof, no reopening of past cases, and GAR and JAR should not override grandfathering provision. The government is well aware about the issue and has acknowledged the industry's concern. IVCA will continue to engage with the relevant department to arrive at a suitable resolution and we seek clarification on the above. In parallel, IVCA has also participated in discussion with DPIIT on ease of doing business, capital flows, covering LLP structure for AIFs, tax clarity and easing investment conditions. With SEBI, IVCA shared its preliminary view on the proposed securities market code which aims to consolidate key securities laws into a single framework. Discussion also focused on improving AIF regulations including flexibility in winding up schemes, investor consent mechanism and addressing structural challenges impacting fund operation. Institutional capital continues to be a key focus area for the industry. And this quarter saw meaningful progress. IVCA has been deeply engaged with NPS and PFRDA to enable pension funds participation in AIFs. These sustained efforts have contributed to regulatory development and have also translated into an on-ground progress including capacity building workshop organized to demystify AIFs for pension fund. This is a significant step towards unlocking long-term domestic capital at scale and remains one of the most important structural shifts for industry. In parallel, discussion with regulators have also focused on strengthening domestic capital flows more broadly, including investment by regulated entities and overseas investment limits for AIFs. Beyond engagements, IVCA made several detailed representations this quarter. These include submission on the Securities Market Code to the Parliamentary Standing Committee, proposal to refine AIF regulations including winding up framework and scheme flexibility, representation on the tax issues such as buyback taxation and promoter definition, industry input to RBI on domestic capital flows and overseas investment, and proposal for the fast-track approval mechanism for AIF registrations and scheme. As per SEBI directions, IVCA has also issued a guidance note for their members on the treatment of defaulting investors. This will provide practical principles for fund manager. That brings us to the end of this edition and also the close of financial year 25-26.